What's really behind the PBOC's greater tolerance to let the yuan, at least the offshore yuan, depreciate? Is it because they feel this is the only stimulus that they've left?
I don't know if it's the only stimulus, but it's part of a package, and they wanted to try and use it last summer. That didn't go very well because of communication issues, and I think this is their second attempt, and I think they've tried to layer in December. They tried to move the focus of the market away from a strictly dollar focus to a benchmark, to a basket that the renminbi trades against. And so overall, you'll see the renminbi stronger, but there's plenty of scope for it to weaken against the dollar.
But is that really a good strategy to support the economy? Because it also raises the cost of servicing offshore debt. It makes the yuan less attractive for the international trade currency, and also it makes overseas investment more expensive for Chinese firms. So does it really pay off?
It is not a clear benefit. There are absolutely risks going both ways. I think this is a reason why they want to keep it very gradual. But I think the biggest problem they had is they had a structural addiction to the dollar. If you look last year, we had US dollar strength. That meant renminbi strength, and that was not appropriate for the Chinese economy. So they're trying to break that structural problem, and I think that's what's going on here.
Richard, among the China bulls, and there are still plenty of them out there, they constantly say, don't worry about the manufacturing data. It's all about the service sector, this rebalancing of the economy, if you will. Yet here we go with services PMI really disappointing, still obviously growing, but nevertheless the growth is slowing. Should that be the real fear factor here?
It's not a fear factor. I think the issue is services is always the less volatile component, but it's going to decelerate over the course of this year. As economic growth slows, the service sector lags and you see it slow. The reason you generally want to focus on manufacturing is it's the more dynamic sector. So when something goes wrong, it goes wrong first there, and when things are going right, it turns first there.
And this data, of course, coming from the private sector report, significantly lower than what we saw from the official reading. The government has really targeted 6.9% for growth rate full year. A lot of people have cast doubt on that. Where do you see the actual rate of growth in China going?
You're much more likely to be closer to 6 flat as opposed to something at 6, 9, 7%. I mean, you are going to be lower. You're still in a bit of deceleration, but it looks like we have firmed up a bit, at least for the first quarter for Chinese growth there.